What is going on, everybody? And in this video, we are providing you a state of the market in stock picks for August 9th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious, unmanipulated market in which we are in. So with all that being said, let's get into a state of the market. Interesting information, technical wise. We were coming into a strong support, something I talked about. We got rejected really hard off of it. It just so happens that a news article came out at the same time. Imagine that, how that works just like that. But with that being said, right when we hit essentially this 4188 or 4162 mark here, we had a Fed member from New York. I don't recall exactly who it was, but essentially what he was saying was that, I'm going to pull up the article here. It said their household financial situation has deteriorated from a year ago, and fewer expected to deteriorate in the year ahead. So what does that mean? That's just one piece of information. We're getting a lot of pieces of information. The dollar is still sitting at 106. Yes, oil has come down, but it actually started pushing back up a little bit today. I believe the dollar and oil could potentially start rising again because we're hitting that demand destruction is essentially what we're doing. The stuff is so high, and something I talked about in the morning call, and I didn't talk about in a weekly update. Kathy Woods came out with a video, which she does every month for the non-farm payroll. She normally has a video. She's been doing it for almost about a year now. But they're really insightful. Maybe you like her, maybe you don't, but she has great insight into economics and trying to understand how things work. I believe you may like her or hate her or whatever, but I believe she's a very intelligent woman, and she has very good insight into what's actually going on, as opposed to a lot of the junk that you get from every other news outlet, media outlet out there. So with that being said, I mean, she was talking about how potentially that the employment rate that we got last week, which was absolutely mind-blowing, that people could potentially be working in 2 or 3 other jobs aside from the regular job. And that could be what pushed up those numbers. And then understand that the savings rate, I was actually looking at the savings rate over the weekend too, and the savings rate has been down extremely low, like pre-pandemic levels, and people are spending a lot on credit cards. That's a blatant obvious, where you've got credit card growth at 35%. So everything is looking really bad. So this whole move that we have. I always say the market is not the economy. The market will move off of what the data it's given. I don't believe stuff can be priced in. You have to understand, it's something that I've kind of been showing on my channel since the beginning of this year. When I started talking about the 50-point basis moves, 75-point basis moves and stuff, yes, when the market gets that level, it is priced in. But you have to understand, as soon as it's been hitting these levels, like it bounces. Okay, 100-point basis move, it hit, it bounced. It was priced in. It was priced in down there, but we had a rally. So it doesn't mean we're going to rally all the way back up. Now there's a high percentage of a 75-point basis move or a 100-point basis move. How much do you want to bet? Again, not financial advice, that we head back down here to 3864 or potentially even 3700, especially since we've been talking about these levels before. We don't want to be back down and we break this level. Again, that is a really solid bounce. If you look back at this, right, we had this really solid bounce. You're supposed to get a big, nice bounce out of a bigger time frame support, and you got that right here. Now, does that say we break back down and come down? I don't know if we're going to come all the way back down to here, but we could sure come all the way back down to roughly around that 38, especially if you start talking about 75-point or 100-point basis move, which is something the Fed has been talking about over and over last week. And continuing to reiterate. Now, yes, we are waiting on the core CPI on Wednesday, which happens pre-market 8:30 Eastern Standard Time. That's what the market's been kind of holding this level, because what is the scary part is that if we come in at 9.1 or lower, we could potentially just rally and rip faces off and this thing go back to all-time highs. This is why I say you can't be so one-sided when it comes to market, especially when you're looking at a short-term outlet, because all it takes is we break this level here, essentially the 41.86, and I think we could potentially get a really nice strong run up to the 4,400 mark, and then obviously you have all the other resistance levels. But I think the core CPI is going to determine if we break up or break down from here. I think we're going to play this range tomorrow. We could potentially push all the way down to the 40.86 tomorrow, and then potentially break from that point and see where we go, depending on the core CPI. Again, there's a lot of big issues that's going on. In recession, we are just hitting the beginning stages. And even talking or even going over Kathy's video, she believes too that we can come out of it pretty quickly because of innovation, and that's why she invested in innovative stocks, because that helps us get out of a recession. I agree with that 100%. There's a couple other people that have stated that, but I think right now it's just early. We're just at the beginning stages, and the fact that the Fed keeps going on the horn talking about how things are not even close to getting bad. You're just starting to see that right now. Tesla approved the stock split. So Tesla has a stock split that comes out on August 25th. You're not going to see the Tesla move like it used to move. And that's why I don't like stock splits, because, you're essentially diluting the shares. And so it takes more shares to get the move that you want. And so when you're talking about trading, right, a 100-point move could potentially move down to a 50-point move at that point. So you're not getting these big moves. And that's not saying Tesla's had some huge moves. Right, it would jump 300 points. So now maybe it only jumps 150 points, maybe 110 points. You have to see how it reacts after a split. The Tesla now doesn't move like it used to before its first split. So we're kind of looking to see how it's going to move on this next split. But with all that being said, and it's a good thing to keep in mind too, because meme stocks have been pushing. Normally when meme stocks are pushing, that's not a good sign. That means next to that, last time that happened, the next thing that happened was the market crashed, essentially from that point, right? When things get ridiculous and your meme stocks start pumping like ridiculous, like Beyond, Bed Bath & Beyond was pumping, AMC, GME, they were all pumping like crazy this morning. They've been pumping the second day in a row. That's a concern, because that means people are taking their money out of good investments and pumping them into these other ones. And we're starting to get out of the cycle of all the earnings. So yeah, we have a lot of good earnings this week. But I mean, a lot of the big hitters are pretty much already done. And so now you're going to start cycling down. So you're not going to have this premium build up. So we are starting to get in that cycle where we'll sell off. Even if we do come in low, I mean, we might have to come in pretty low on a core for us to break above this, because you have to have a clear picture of the next 6 months. You have to think of a way of an institution. Institution is not going to put, millions of dollars, billions of dollars into stocks, right, when they don't know what's going to happen in the next 6 months. They have to have a clear picture of what's going to happen, and there is no clear picture of what's going on. All we know is the Fed is fighting inflation, and anything else that gets in its way is going to be absolutely wrecked. And so, again, all the data is, so some of the data you're seeing is delayed data, and some of it looks good, but you have to understand, you have to kind of think outside of the information you're getting, not just the information. You have to sit, digest it, kind of trying to understand what's going on, see the price action on stuff. After a while, this stuff becomes a lot easier. When you first start getting into this stuff, it's hard to kind of digest what's really going on. But you have to understand that things are leading up to a bigger potential move down, in my opinion. But it's not saying it can't go up. So you don't fight the current. Currently, the current is up, and we're in full-on earnings mode in Hopium right now. When the Hopium, you need some really bad news that's kind of unexpected for us to flip, right? Our expectation, I think, is 8.8 going into this next core CPI. If we hit that, then we're good. Even though it's bad, 8.8 is extremely bad, because that's, especially with the job numbers last week, the Fed's going to come in at 75 minimum. because they feel, well, the market's strong, so we can just keep laying on the interest rates. You have to understand these interest rates and the rapid pace in which are coming out, right? People aren't going to want to, the house they could afford, the $500,000 house they could afford maybe 6 months ago, right, is millions of dollars at that point, right? You keep raising these hikes, raising these rates at a rapid pace, right? It's not the same payment, right? People, every time someone gets into to purchase a house, all they care about is the monthly payment. They don't care about the end. But what you understand is these interest rates, right? They keep getting hiked up, 75 point, 100 point basis moves. That means your overall final total for the mortgage at the end of your 30-year fixed loan, right, is multiplying 10x, right, or 2-3x than what it was. So you're losing dollar value, and then the U.S. is continuing to dish out they said another $1 billion to Ukraine today. I think it was like $4 billion or something they're sending out to Ukraine. So all this money they're printing, right? It's almost like they're siphoning all this money back out from all the things that got approved, right? Like all the pandemic, small business, trying to help small business and all that. Instead of giving that to the people, what they're doing is taking that money that's just been sitting around. Nobody's essentially claimed that money, so they're just sending it over to Ukraine. I may be completely wrong about that, but where are they pulling all this money from? And unless they're starting to print more money, now if they're starting to print more money, that means you're going to have more inflation. And this whole bill that got passed over the weekend too, this whole inflation bill, which is absolutely absurd, because if they're going to print a couple $2 billion, right, that's going to make inflation worse. There's nothing, you don't fight inflation by printing more money. That's just not going to happen, right? It's just diluting your dollar even more. Your purchase power continues to drop off, and somehow that's okay. And somehow the market, but again, you can't tie emotions to what's going on in the world to what the stock market is, because this is why price action is so important. So if the market is pushing up, don't fight the current, right? If you get multiple days, which we've had multiple days of just pushing, in these days that chop like this, like I don't play them. If the market's flat tomorrow, if the market is sitting at 41.50 tomorrow, I'm just not going to play it unless it pumps up to here to 41.88, and then it starts dying, and then I might jump in and short it at that point. Or this thing gaps down, and then we just start selling off. But we have a lot of now, which was all this resistance. It took us, didn't take us much to break through it. Again, it wasn't the first attempt. We have retested. We get more of a kind of a retest. We do hit this. I wouldn't be surprised if we hit this and pop. You're going to need some really bad negative news to break, like really bad core CPI for us to break back through this and start coming back down, which could be a strong possibility. Again, we've got 4 warnings from the Fed. Now we just have to see what happens. So all in all, we're still waiting on Wednesday. Again, another piece of news as well is NVIDIA came out today. Their forward guidance is looking really bad. They missed expectations really bad too, I believe, and they lost a lot of sales. From what I gathered, I didn't look too much in that report, but so that being said, I mean, you're getting a lot of these smaller companies, right? And good companies are still getting crushed, right? You can only look so way. And I think it's why a lot of people are getting dumbfounded, why the market is just pushing up, right? Because things are really bad and they're not getting better. But you can portray something getting better by going in the media and saying, oh, you're not really in a recession. Yeah, 2 negative quarters of GDP. Fine, great. But that's not what we're seeing. And then today, the article about New York and people saying that they just don't have it, right? If you're working 3 jobs, okay, that's great. Yeah, we got tons of people working. The job market is strong. Well, not if one person in your household is working 3 different jobs to just pay for gas. And some people, that comes where the demand destruction comes from, right? Is that gas prices are coming down because there's not enough demand there, right? Like people aren't going to go drive if it's $5 to fill up the tank or wherever you're at, right? Here it was $5 at one point, It's come down from there a lot, but you have to understand that there's a lot of other ones, a lot of other places that were way higher than that. You start talking about New York or California or something like that. I'm sure it was well over probably $7-8, right, for a gallon of gas. Like, people just aren't going to drive. And something I talked about in my morning call, right? It's the obvious things about going out in public and seeing the obvious things. Like, I have noticed there's less cars on the road. I've noticed there's a lot more people walking on the weekend when people were normally out and about doing stuff, right? People just don't go out and do this stuff anymore because of what's going on. And so it's just being observant about your surroundings and really kind of seeing what's going on, and not just taking opinion. Even my opinion, right? I always said you need to be looking at other people's opinion to include mine, to again, bring in what you believe to be correct, believe in whatever data you're looking at, and come up with your own thesis, and then you move forward from there. But this is my thesis, and this is my channel, so go ahead and hit the like button just because you like to be here and hang out with me. If not, that's cool too. It's whatever. But nonetheless, so that's what we got on SPX. Bitcoin, again, I'm going to follow the market. I'm not going to really go over Bitcoin until the market really starts either pumping up or down. I think there's no real point to start looking at Bitcoin. Again, the level, it's got the 50-point EMA here too. It needs to break this, in my opinion. I think if we could break that, again, I really think you're fighting with this level here, the 2,800. So, or 20, we could say 2930, 30K. I think you haven't even retested that. So by the time we make it up there, if we do make it up there, you're going to get a hard rejection. Now, is that rejection going to be what sells us back down to 10K? I don't know. Yes, I believe crypto is the future and everything like that. Yes, I 110% believe that, but you can't force it. Right now, the market is unclear on where it's going. Don't force it. If you're dollar cost averaging, that's something different. Now, if you're trying to swing, daily swing, or whatever the case is, right? Not financial advice, but maybe you want to take a little off the top on every pump, but or whatever you need to do. But again, not financial advice. So nonetheless, Tesla, this has really started selling off heavy. I do have a position in this in TSLQ here. And now what is TSLQ? Is essentially this essentially tracks the shorts on Tesla. So as opposed to playing Tesla and try to short Tesla, you could play this to the upside. That would be the same as shorting Tesla. So I do have a position in this moving forward, because I do believe Tesla has peaked right now. And I think if this core CPI is bad, I think this thing is going to be is going to fall quite a bit. So I think Tesla could potentially come back down. Again, it has a lot of support. First level being 821. If it breaks that, then I think, and then you got 758, around the 700 mark, and then back down to the 625 mark. Again, you're an off cycle now. Like I said, Tesla, once after it has its earnings run, you're going to go 3 or 4 weeks where this thing is just going to sell off, and then it'll base at some point. Again, it really depends on what's going on with the markets, and then it will cycle back up for its next earnings cycle. Maybe it makes a higher high, maybe it doesn't. It really just depends on the market sentiment. But you have to understand these pumps they always come in just before earnings. So yeah, they do try to price some of it in, but you have to understand. But something you could track, I haven't really looked at, but I know these cycles occur all the time. So it's just a common cycle that you see on every earnings run. Now, before it used to be like about a week and a half out. Now it's been kind of just trying to gauge like in between Fed meetings. So whenever there's a Fed meeting, like I said, we didn't get this pump really until after the Fed, because there was so many meetings and so much information. It tried to run and get knocked back down. It tried to get in the cycle, but it just wouldn't happen. And then we had the Fed meeting, and then it just took off from there. And then that's your earnings cycle right there. And then now it's dying off. We'll go 3 or 4 weeks and then do it again. So that's kind of what that's why when I don't chase these when they start flying up like this, because it's like, just be patient, wait for the cycle, the earnings cycle to end, and then grab it when it consolidates and then go back up again. So yeah, it might be a little higher low, but at least you'll know that, okay, well, the cycle's kind of slowed down here. It's getting ready to pick back up. We get about 3 weeks out from earnings. Pick it back up and write it out. So that's Tesla. Apple still really high. I think these are all topping out. I think these can come back down again. It hasn't even hit the support in a minute, so you have to watch this 170, 157. Again, this is a moving EMA on the daily, so you'll get a nice bounce off of this. But I can see us at least selling off down to there. The question is, if we get a bad core, will we hit this and hold there? Apple's a strong company, so I could really see it hitting and holding here, potentially, unless we continue to spiral downwards, which could happen, and then it breaks all these supports again and comes back down. But we have to see. So I'm kind of watching that going into Wednesday. Again, Wednesday is my big gauge here, so that's what kind of I'm watching. And then today, NVIDIA got that news about forward guidance being bad. So this is something curious to watch. If this breaks below this tomorrow, this 172, if we can open up below that, I think this thing can potentially gap down to the 158 tomorrow. So that's one I really want to watch. The chips. Now, this isn't just NVIDIA. When I talk about chips, you can pick any one of these, right? They started breaking back down. AMD, I think, it dropped all the way down to 92. That's not going to say it's going to happen in one day, but you have to understand that it should come down, right? If you have a long enough contract that's close in the money, or you're shorting shares. I don't short shares. I used to do that, but I more so just buy a put at this point, with some time to be able to catch that gap down to that support. Again, it hasn't hit that support. You should get a nice bounce off of that. So you definitely want to make sure you close that position pretty quick, because as soon as it does hit that, it's going to kill premium pretty fast. So chips are big on watch tomorrow. I think the MEM stocks could potentially be one. Again, this is anytime you get a big break like this, yes, it'll shoot up and then it'll come back down. I'm kind of looking for this thing to retrace at least potentially back to the $20 mark. So I want to keep MEMS on watch, especially if there's cycling. You might get a lot of junk in a lot of stocks, and if the MEMS are pumping. So I kind of want to watch these and see AMC. So I'm watching that, the $20 mark. Again, these supports will move given the next day. So, or potentially watch this 22.31, see if it bounces there and heads back up. But I want to keep them on watch. Again, these things you got to be really careful for, especially in the morning, because you get a nice pump and then they just dump. So if you're not seasoned in the market, I wouldn't be messing with these stocks at all. Again, any kind of options for these things get absolutely wrecked very quickly. Again, this thing, you don't want this GME to break back down below $40. And again, your top right here is 47. We'll go 48. So you want it to break above this for it to get any kind of momentum. Again, it's about the second day, so you could probably get a 3 or 4 day out of it. But again, when you start messing 4 or 5 days on a stock pumping, that's definitely FOMO, and you need to be careful because you can get wrecked. So again, my opinion, not financial advice. Let's look at BA. BA, everything is like topping out. This is what I'm saying. Everything's hit support. I think I'm expecting a lot to come down. And then again, I think we'll be here by Wednesday. And then Wednesday will determine if we actually break the support and come back down, or we pump and then actually break through this and continue on. So that's kind of really what I'm watching. SQ, I really like SQ. But again, a lot of these I don't want to mention because right now it's safer just to be in well-known stocks as opposed to just guessing about stuff. Coin, I could like moving forward. Again, if we pull back, as long as it can hold essentially the $75 mark, I think we could be good. But really want to see what it does there. If it does hold, looking for a nice pump up and seeing what we do from there. So want to watch coin as well. The banks are starting to turn. JPM, it needs to hold 114. If it opens below that, could potentially sell again. The reason why breakouts are not working this year, broke out and break right back into it. So if this can't hold, and get back above here the 117 mark, it's going to be an issue, right? It's going to break back down in the lower channel and continue to sell. GS has had a very strong. GS has been one of the stronger banks here. Goldman Sachs. Don't want it breaking back below essentially the 331 mark. If it breaks back below this, yeah, you'll have some support here, but this thing's eventually going to start heading back down. You don't want this to break the 200. If it barely breaks and then sells off, that's kind of what we did at the beginning or towards that back half of last year. Every time the market hit an all-time high, I think it stayed all-time high for like half the day, and then it just started selling off heavy. So it did like 3 times in a row, and then we got that massive selling in the beginning of the year. So this, I think, is the same kind of aspect. You broke above this, and it's not going to hold very long because you got a lot of Fed news coming up. It's good to sell us back off. So again, banks are something you really need to be watching. If banks start selling, it's only a matter of time before everything else is going to catch wind and start selling as well. Tech is starting to look weak. Tech has ran. It's had its run. You need to be careful with tech. Tech could really start selling off pretty heavy. Now, retail, Amazon needs to hold this 138 mark. If you can't hold that, again, big drop. You got this big gap right here, actually. You do have support here, but I wouldn't be surprised if this gaps and touches down here to the 122 mark. Could wake back up, but you got a gap fill right here. It could potentially have as well, so watch for that. But that's pretty much it. I don't want to make this video too long. We're really waiting on Wednesday, to be honest. And we'll see what happens. So there's been a lot of information coming out. So if we get more information, we could start the selling going into Wednesday in anticipation, especially if we're looking at 75, 100-point basis move. And if the futures continue to climb on that, then that could be an issue. But we shall see day by day, see where we land, and then take it from there. So if you made it this far, go ahead and smash the like button. Until next time, I'll see you guys.